Mark, good to see you. What are you expecting from auto sales this year, given all of these headwinds on shortages and higher gas prices?
Well, I think, you're going to see the market under pressure this year, but it's not because of demand. I mean, there's still a lot of demand there. The consumer their financial balance sheets are pretty healthy. This is really about supply. And, you just mentioned it. Not only the semiconductor shortage, but literally in the last week, whether it's, the outbreak in COVID in China in a couple of provinces that produce a lot of automotive components, to the situation in Ukraine where a lot of components like wiring harnesses come out of, to just the last day or two, the earthquake in Fukushima, which has shut down, at least temporarily, a couple of semiconductor plants that provide chips to the automakers. This is going to be a supply issue. And the most important job in the automakers' roles these days in their C-suites is the chief procurement and logistics officer.
So if that's not happening, what do you expect to happen to prices, given that kind of dynamic?
Well, I think, what you've seen, obviously, average transaction prices literally every month are going up because of the supply constraint. Now, when you lay in fuel prices, I mean, everybody looks at the comparison to 2008. We're in a very different time versus 2008 because, today a lot of crossovers and SUVs are built on car platforms, which are a lot more fuel efficient. Inventory is scarce, so therefore the automakers have some pretty good pricing power. Whereas back in, 2008, the last time we saw $4 a gallon gas, the automakers were producing way more cars than the industry wanted. And then finally, just the consumer and the economy are much healthier, right? Because in 2008, you had the financial markets collapsing, you had layoffs that were mounting, all those kind of things. So I think you're going to continue to see a very strong pricing environment just for the fact that supply and demand is unbalanced right now.
But I wonder if we see, Mark, a shift in consumer behavior toward EVs, given the fact that we are looking, what was the average, $4.28 per gallon across the country right now. I'm not sure they're easier to get, and they might be getting more expensive as well. But do you ultimately think that this tips us over into more demand for electric vehicles?
Well, I absolutely do, right? When a consumer comes up to the pump and they're paying $60, $70, $80, even $100 to fill their tank, that's gonna provide a pivot point for people to be more interested in EVs. I think the issue, and you mentioned it, is they're tough to come by these days, given the whole production constraint in the. Plus, the industry forecasters said, listen, the total cost of ownership between an ICE or an internal combustion engine vehicle and an electric vehicle, they would have crossed probably in the next year or two. That's now been pushed back because of the increase in the minerals that go into batteries, like nickel and cobalt. So the pricing is going to go up. So yes, there'll be more interest, but the consumers are going to have to wrap their head around that they're going to cost more.